Lost the signal, and by the time the signal came back, it was over.
I'm going to call this meeting to order. It is 5 o'clock. Hello, and if we could start with roll call, please.
Mayor Smith,
Here.
Mayor Pro Tem Swartz,
Here.
Trustee Valentine,
Ruh-roh.
I know he's there, so.
Well, yeah.
Trustee Check,
Here.
Trustee Heck,
Here.
Trustee Hunter, here, Trustee Stelter.
Here. I'm here.
Okay. All
Thank
right.
you, Trustee Valentine. No, you have a quorum.
We have a full house. All right. And with that, I'll need a motion to approve the agenda.
I make a motion to approve the agenda.
I'll second.
Okay, all in favor?
Aye.
Hey, thank you. And I think we're going to dive right into the audit. I don't know who's on first, but if you'll just introduce yourselves for the record and for us, that would be great.
My name is Jim Hinkle with Hinkle and Company CPAs, and we did the annual audit of financial statements.
My name is Lorraine Trotter. I'm with Professional Management Solutions, and we function as the town's accountants and financial consultants.
And Lorraine and I have done this little show with a couple of other towns, so I think the way we have done in the past is I'll start off and talk about the audit process a little bit. And then Lorraine will jump in and talk a little bit about the financial statements themselves. And we'll kind of go back and forth a little bit. And then, boy, if there's ever a point where someone has a question, just let us know and we can let that question jump in. The more this is an open dialogue with questions and answers, the more you all get out of it, and the more that we welcome that. So,
Okay, and I'll just add one thing. Usually I have to call on the trustee to ask. Let's just everybody be comfortable asking questions. You don't need to wait for me. Thanks.
We did the annual audit as of December 31, 2024. We start off our audit by updating our understanding of the internal accounting controls. One of the things that we're looking for is what we call a segregation of duties. The transaction typically takes 3 steps: the initiation, the approval, and the recording of the transaction. And we do not want to see one person doing all of those 3 steps. And we look at also the disbursement cycle, the payroll cycle, the receipt cycle. So we're looking at all of those independently. We also look at the policies and procedures in the accounting department to make sure that those are sound and good policies. From a technical standpoint, we're looking for what we call a significant deficiency or a material weakness in the internal control structure. A significant deficiency is defined as a design flaw in the system of internal controls that would allow an error to go undetected in the ordinary course of business. And a material weakness would be a significant deficiency that could result in a material misstatement to the financial statements. And based upon our analysis, as well as all of our testing throughout the audit, we did not find any significant deficiencies or material weaknesses in the internal control structure. That's the answer that you wanted to hear. We also use all that information for us to design our tests of the actual financial statements. We use what we call substantive testing, which is tested details and analytic review procedures. Tested details is pretty much what it sounds like. We drill down into account balances, we look at the underlying transactions, and we verify those through source documents, invoices, cash receipts, agreements, contracts, etc. And then analytic review is where we look at the current year's revenues and expenses to the prior years, the current years to budget numbers, various relationships between the balance sheet, assets and liabilities, and the revenues and expenses. And we're looking for relationships that we either don't expect or can't explain. And if we find any of those, we do more tested details within those related accounts. The end result of that is the audit opinion. Yours is technically referred to as an unmodified opinion. And in layman's term, that's a clean opinion. States that the financial statements are in accordance with generally accepted accounting principles and applied on a basis consistent with the prior year. If we had a problem, we would modify that report. That's why it's called a non-modified report. All in all, the audit went well. We worked with Michelle, who we worked with in the past as well. And that worked, we worked real well with Michelle. We will issue a required, or we did issue a required communication letter, where we're required to communicate in writing if certain events occur in the course of the audit. And we do not have anything negative to communicate in that letter. We did not have any difficulties in the course of the audit. We did not have any disagreements with management. And we did not have any what we call audit adjustments where we found errors in books and records that will require us to come in and fix those errors. I will say this, that I was nicely surprised that Stefan has dived deep into GFOA and filed a GFOA with the budget, and is now planning to file a GFOA full ACFR. That is an acronym for an annual comprehensive financial report. That is this in the middle part, section 2. Section 1 is an introductory section, a letter from the town, an organizational chart, and then section 3 is kind of a big piece. It's 10 years of statistics that cover, oh gosh, about 15 to 20 different schedules. Everything from tax-based to employment-based, a lot of non-financial numbers. That is a huge lift. And so I commend that effort. I am very pleasantly surprised that you're picking up that. I think that is a fantastic tool. It gives anybody that's interested in the town phenomenal information, not just financial, but all aspects of the town, the county, tax revenues, all kinds of things. So I think that is just a phenomenal thing. It may take a couple of stabs to get everything the way GFOA likes it. The way they work is that when you submit your budget or your ACFR, it is sent out to one of their many, many reviewers around the country. You never get the same reviewer twice. And every reviewer is looking for different things. They have a general checklist that they go through, but one thing may be important to one and not to another. And so even the larger cities are always getting comments back every year as different reviewers are focusing on different parts of those reports. So it's great feedback. I think that's fantastic that you've taken that step, and I commend that efforts. Thank you. Finally, from an audit standpoint, one of the more important things that I believe that you all need to hear is that we as auditors felt like we had open transparency. Everything that we asked for was provided in a timely fashion. We were never refused any access or any documents. And so we felt like we could ask for and receive whatever we needed to do or to ask for to do an independent audit. So that's very important for, I think, for you all here as well. So with that, I will turn it over to Lorraine, and she'll kind of walk through the financial statements.
Thanks, Jim. I echo your comments about taking on the ACFR, and that can really help you if you go out to seek financing in bonds or something like that, where you're looking for a bond rating, because it shows a higher level of sophistication of your financial reporting than is typical for most small towns. So that can be a plus. Well, I like to start off these sessions by saying my personal view that amongst all your many duties as members of the board of trustees, I think that your fiduciary responsibilities may be the most important to safeguard the assets of the town. And you've had situations that you're aware of here that, make that very clear to you. So what I'd like to do tonight is just walk quickly through these financial statements so that you know what's in here. You can get some questions answered tonight. And hopefully you will feel that by the end of my talk, I've satisfied your knowledge of what's in here and that you have a good understanding of the financial status of the town as of the end of last year, and that you can recycle this or put it on your shelf or delve into it farther if you're really interested in all the material certain parts of the material that's in here. And be happy to answer questions later also. But the audit starts out, of course, with the auditor's opinion letter, which Jim described, saying you've got a clean opinion, so that's wonderful, that's what you're after. And then the next part is management's discussion and analysis. And again, Stefan has written this, and it is a lot of it is prescribed as to what types of things need to be covered in the MD&A, as it's called. But one of the things that could be really useful to you is the very first section on financial highlights. So if you get a reporter that asks you how's the town doing, I saw this was on your agenda, or even a neighbor or somebody that said, oh, well, how's the town doing? You can say, oh, it's doing great. And with your reporter, you can pull this out and start listing off some of these facts. You might get a high school or college kid home for the summer that's supposed to do some, report on their town. So these highlights are really good. And the first one is that your net position is $18 million. So that's a very nice number to have for your net position for a small town. And it went up from the year before, from 16.8 to 18.1. So that's a very good increase in 1 year. Then the next bullet discusses, what the portions of that net position are. And the first one is 11.9 million in capital assets. So yes, that counts toward your bottom line. You can't spend that. So the other things that are important are the unrestricted and unreserved net position that's in that little subparagraph 3 there, where you've got 5.3 million and 878 million. You see how it refers here to governmental activities and business type activities? And you may be aware of that, but in governmental accounting with a city or town, it's not just one bottom line. You have all these funds that represent the various activities that a city or town undertakes, and they're diverse. And there's different types of measurement going on between what's called the governmental type activities and business type activities. So business type activities are your water, sewer, and trash funds, where you're selling goods or services for a price to customers, and you're trying to make enough money to pay for your operations and put money away for replacement of the capital plant when needed, like a normal business. And they use the types of accounting where they fully look at their assets, and those pipes in the grounds and treatment plants and whatever, because those will have to be replaced. They could potentially be sold if you've got some district or something you want to sell them to. So that is a business type activity. Whereas the governmental activities aren't so much like a customer and a vendor type transaction. You are government. You are required to provide certain services, and you tax people for them rather than charging them each time a police patrol officer goes by somebody's house or there's a pothole fixed. All this is general government, and so there's not so much charges for services. And so you're not measuring whether you're making a profit over time and you're saleable. You're not going to sell the town hall probably, or your streets certainly. So you're not measuring your whole economic condition like the business types are. You're looking at the flow of money. Do you have enough money in your fund balance to provide for these goods and services if things were really to go wrong? Do you have enough money to replace the things that you need to when it's time? Whereas those business type activities are measuring economic health, not just the monetary health that you have. So that's why there's reference to both of those types here. And so the third bullet on that page 1 talks about the town's governmental funds, and it lists what they are. Have total ending fund balances. You're looking at money available at the end of 1 year to be used for the next if needed. 3 million. This compares to prior year fund balance of 2.8. So that was an increase of 288,000, which is about 10% in 1 year. So that's also good. And then these unassigned fund balances, it talks about here, represent about 45% of your general government expenditures and other financing uses. So we'll talk about that percentage in a minute. On to the next page, there's a little more information about some of the other funds besides the general fund. And you have several major governmental funds, the general fund, the sales tax capital improvement fund. And that's because they have revenue sources that are restricted. The general fund is for everything that doesn't go into a special revenue fund or some other special fund. But the sales tax has a restricted use of what the money in the fund is for. And you don't want to just blend it in with what can be used for general government.
Good question. Would either of you like a glass of water?
Don, good.
Would, please.
Patty, can you bring two?
I think that's where she's headed.
Yeah, that's what made me think
Thank
about
you
it.
very much.
Bring a second one. Thanks.
Would you bring me one too? So moving on, we'll skip some of the general information here, but most of the information on small room and numeral 2 and 3 talks about the government-wide financial statements and the different types of funds that you have. So let's get to where the rubber meets the road over on the small room numeral 5. And that's where you've got a statement of net position isn't just one bottom line like you'd see for a business. It shows the governmental activities in 2 columns, because it shows 2 years of information, and the business type in 2 other ones in total. Take a note of the governmental activities. Your current assets are 3.7 and your capital assets are 3.0. They're pretty equal here, which is kind of unusual. So you've got a fair amount in capital assets. But when you keep going to the right, to the business type columns, you'll see most of their assets are those big capital assets. And generally, in governmental accounting, where you're tracking the flow of money for those governmental funds, you don't even show the value of these capital assets in long-term debts because you're looking at 1 year at a time. What's the fund balance? What are we going to appropriate for next year? Or do we have enough money? Thank you. But on these front pages, it does throw in the capital assets and any long-term debt associated with it. So moving on down to the bottom, you'll see total net position for the governmental is laid out in more detail moving down that column than what was in the highlights, but that's where you get to those numbers about the total net position. For the governmental, 6.3, for the business type for 24, 11.8, and that brings you to the 18.1 for the total at the end of 2024. There's some more information there about what grew during the year, and I recommend that you read through this whole MD&A when you have a chance. We're going to move now over to page 7 in the small room rules. And whereas the pages we were just looking at, that net position, represent what's been acquired over the whole time that Paonia has been a town. From the time it was founded until now, you had 18.1 million that you've amassed in net position. The charts on page 7 show how did that net position change just in the 1 year of 2024? Well, this is how it changed. You had these revenues come in and these expenses go out. And so the third line up from the bottom shows the change in net position. All those are positive numbers saying that you had more revenues coming in than you had expenditures going out. So you added 500,000 to the governmental to bring it from 5.8 to 6.3. And you added almost 800,000 to the business types to bring it from 11.0 million to 11.8 million. And so you can see, again, at the top of the page under the revenues, what I was talking about, how where the different money sources are for these different fund types. The governmental activities, you have some charges for services. You charge for building permits, various fees and things of that nature. But general revenues, the taxes, is where the real revenue, big numbers come in for the governmental activities. And then there's the program expenses that shows you by general category, and these are standard categories used in these types of reports, where you're spending that. And it's not unusual to have most of it in public safety and public works. And then on the business type activities at the top, the biggest numbers for revenues are charges for services, as it should be. You don't want to run a water company that you have to tax people for. The customers should pay for what they're using. So this all looks very good to me. Very, very good. Down beneath this chart is a little bit more explanation about how these revenues changed in noteworthy ways during the year. You can look through that again. And the same thing on page 8 for the business type activities. Then over on page 9, you get into some nice charts. And the pie chart there shows for governmental activities, revenues by source. Guess what's the biggest one? Sales taxes. So well over half of your revenues come from sales taxes. And then you have some from property taxes. So those two together are like over 75% of your revenues, sales taxes and property taxes. That's always good to keep in mind the importance of your tax base, your business community, your efforts there, that the people's properties are assessed correctly, et cetera. And that people pay what they're supposed to, what they do. Let me get it. Percent of the bar chart below, percent of total revenue for governmental activities shows it in a different way for the 2 years. But it's those same numbers from the pie chart up above. And then when you get to the governmental revenues, there's a little bit more there. Much more explanation on that Stephen has provided you. And he mentions the importance of tourism and how your sales taxes are dependent on that. Over on, he goes into some very good detail here about the governmental cost recovery, and most of your governmental, general government services don't have program revenues to support them. Again, they're tax-based. But over on the business side, let's look at page 13. You would look at the business type revenues by utility. You see for the blue bars are 2023 and how your revenues went up in 2024. So anything you're doing there to keep your rates and fees at appropriate levels is paying off. And these are going into your budget session, which comes next in your financial year. You always want to keep that in mind. Are you charging enough for your utilities? Because especially with smaller towns where their big numbers changing a little bit is a big percentage, you cannot afford to get behind on that, because there's always that looming cost of replacement of what's coming at some point. And it might not be, it might not be because of growth or age. It might be because of new regulations or something, but you have to have very big outlays of money for capital.
I can explain why revenue went down between sewer and utility. In 2023, we received a capital grant for Doris Avenue. That got recorded in 23. We didn't get that same revenue in 24. That's why it's kind of stabilized now based on just our charges for services.
Okay, yeah. The next page shows the operating income or loss by utility, and they all had income of both of these years, so that is good. Water utility did much better this year than in the year before, and sewer utility again for that. Maybe perhaps for that reason, had a less of a operating income. We're gonna go over to page 15, which shows the business type revenue by source in a pie chart. And here it's that same picture that hopefully we had in our mind from the raw numbers, but that is that 82% is from charges for services, and that's really good. You do want to see that. You get some operating grants, you get some capital grants. Other might be interest. I'm always encouraging my clients to use their local government investment tools to get as much interest as they can.
So next year, we should see this look very different.
Oh,
Because
Yeah, you're gonna see more capital assets and new debt. So
And just
Next
that-
year being 25 or 26?
the 25's fiscal year, you're gonna see that.
The bottom pie chart is interesting that your water utility has more than twice as much of a percentage of the revenues as your sewer utility. Keep your eye on the sewer, make sure that you don't let that one lag behind. Water, you definitely can get some gravy when people use more water for this reason or that, and sewer is pretty much stable. But you do want to keep your eye on those rates and make sure. In some cases, it's more expensive to provide that sewer service than it is to provide water.
Not to mention what needs to be fixed. Like all our sewer. pipes.
Yes.
Yeah.
Deferred maintenance means that you're keeping things back, not you're just pushing it off to the next year.
Cool. I'm going to skip over to page 17, which is the this financial analysis of the town's funds. So all the things we've been talking about so far have been rolling up those funds into governmental activities and business type activities. And as was mentioned earlier, you've got major funds versus ones that are called non-major, they don't call them minor. And so each of your major funds is discussed here. So the major governmental funds are the general fund. And you'll see the interesting information here about what you're getting return on your money, the Fed funds rate, your expenditures, decreases or increases from prior years on expenditures, and some explanation as to why that's happening. This is the kind of thing that those rating company analysts love to see. So this could really help you if you need to borrow money. Then you have the second major fund, which is the Sales Tax Capital Improvement Fund. And it tells you here how it was established, what the ordinance was, the referendum, what it did. It raised the sales tax from 2 to 3% with that extra 1% going just for sales tax capital improvements. So that gives you a good base for making the improvements that you need to for your streets and buildings, parks, etc. Then you have a couple non-major funds. You've got your sidewalk fund and you've got your conservation trust fund. Conservation trust fund is where you keep the lottery money sitting for share with the town. So they can only be used for parks and certain recreation reasons. And then your sidewalk has specific revenues that can only go for that. It's a special revenue fund. More information about each of those is given here. And you can harken back to this throughout the year as well. Then there's more information on pages 20 and 21 about your capital assets, what you bought, what you need, what you have. And over on the page 21, it shows you year by year how it's increased from 3.029 at the end of 23 to 3.98. What you have, what the depreciation was, what the value. That's governmental, and then business type is in the 12 millions value, as we saw earlier. Long-term debt, there's information here about the transactions you have. Most of yours are related to potential payouts to employees who have earned benefits for leave that they haven't taken, that you still owe them for if they were to leave employment. And so that's calculated as a potential liability. It's a more or less conjured up number because we don't know who's going to leave when and what their rate of pay will be the day they leave, et cetera. But this is a placeholder to keep that in mind, that you will have to pay out that money when people leave. You grant these benefits, they get to take them. I'm going to skip forward to the economic factors on page 22. And Steve guided us through a number of things here. Another thing that you might consider is the changes in the governments, in the federal government, and how they're doing things to try to improve the economy. And it's going to be very different from the past years, and it seems to be being very effective so far. But one of the side effects of it is that there's fewer grants available to state and local government. That will help the economy in general. So maybe other things, taxes, tourism, et cetera, will go up. And that's hoped for, but no one really knows how that's going to play out on a year by year basis on those, what had been funded by national people's taxes here in your area before. So there's kind of a shift in thinking about who should be paying for what, where.
we did get another $1.9 million federal grant, so this year, so it's working for us.
Yep. Keep it up.
For now.
And it is kind of interesting. I was at another board meeting this morning for a nonprofit, and while there's chaos galore at the federal level within the departments and some of them going away and whatnot, the grant funding hasn't seemed to change much yet. The federal grants outside of the USAID and some of those, the roads, the bridges, the infrastructure grants seems to be staying in place at least through the present. And so we're seeing that with other departments like Department of Education and a lot of the social services. The money still seems to be flowing and hasn't been really cut back yet. So hopefully that keeps going.
Yeah, because you're building infrastructure with your grants. It's not programs of aid, et cetera. So that's why it's more likely to keep going. Well, I'm leaving the MD&A then now after a little bit of applause.
We see a lot of these MD&As, and this is probably one of the more comprehensive MD&A analysis that we've seen go into some of these municipalities. Very detailed, very well written, very good. So if any of the town's citizens do have an interest, this front document here is really a good document for them to look at.
I'm gonna interrupt really quick just to second the appreciation for Administrator Webb. I was working late Friday. I left, he was still here. I saw his truck here Sunday. Yeah, I'm sure, but well done and thank you.
Yeah, it's a very good MD&A.
And all the statistics.
Hey, I got that, so.
Wait till you see those.
No,
No,
that's-
never done.
and I found some things where, yeah, you'll see in the statistical section, there were previous audits were like,
It's hard enough to do 1 year statistics, but catching up for 10 years.
And see some of those numbers, it's like,
Yeah.
what happened between those? Yeah.
well,
Anyway.
in 2015, we were 2 years coming out of the embezzlement, and there were some things that they had to restate fund balances
Oh, yeah.
from 2014, and they corrected things, so you'll see that in a final document.
Moving on then to the bulk of the financials. So page 4 is what we looked at in condensed form in the MD&A, so we're going to skip that. And so is page 5, that was in the how things change in 1 year by those different types of activities. Page 6 is where it starts to look like what you're probably used to seeing with the monthly financial reports that we give you. So there's a balance sheet for each fund, and it shows your cash and liabilities and your fund balances. And then the one you're probably the most used to seeing is on page 8. And that's a statement of revenues and expenditures and changes in fund balances. So for your budget work, this is all you focus on, is revenues and expenditures and changes in fund balances. So at the bottom of the page, it says fund balance beginning of year and fund balance end of year. And you want to take a close look at those numbers and think about the reason that you have the fund and what might be needed. So general fund is most important in this regard, in that is the requirements to be a town, the things you mostly have to do. Now you have some options in here for a festival or whatever that aren't required, but general government, public safety, public works, you've got to do that. And so you want to take a look at your revenues and see the 1.2 coming from taxes and your fund balance. And ask yourselves, what would happen is if we had a flood or a fire or a tornado or something that just took out our tax base 1 year, and those revenues stopped flowing in. And do we have enough money in our fund balance to keep providing these required services until such time as that downtown is rebuilt, people move back, and you get maybe FEMA assistance, but there's a stretch there where you are on your own and you're gonna need to have a decent fund balance. So the smaller you are and the more condensed your tax base is geographically and more susceptible to one night or one day's being wiped out by a fire or something, the more you want to have in your fund balance to get through a whole year of not having those revenues. So I believe you're in good shape. You're not quite a whole year's worth. You could also trim off what services you provide in an emergency like that. So maybe you didn't do culture and rec and you didn't spend anything on capital for a year or two. But you would have enough with your fund balance and to keep things going for many months, for several months. But if you decide to have a policy where you'd like to have a year's worth, or you want to have, 9 months worth or something, and when you look at your budget process coming up, just talk that over and see what's realistic and what you might want to build to. On the sales tax capital improvement, that's not the same as the general fund, because you don't have to do any of that improvements in any one year usually. You want to, don't want to defer projects, but you can if you must. But this has a healthy fund balance too. And these taxes are building up, you had no expenditures, so you're taking in the revenue, you're building it up so that you will have enough to do a big project. Street fund, the same thing. And then your non-major funds altogether, they are only about 160,000. They are on page 43 in the back of the book, as separate columns for each of those two non-major funds, the Conservation Trust Fund and the Sidewalk. Moving on to page 10. Oh, and I'm skipping 9 and I skipped 7. That shows how we get from that front section that includes the capital and the things that aren't in the flow of monetary resources, flow of financial resources basis of accounting, to the full accrual, they call it the full business type accounting that showed the capital assets and the long-term liabilities. That's the connection. So if you look at the general fund balances here, they're not going to tie to that net position that was up front because it has those capital assets and long-term liabilities. These don't. But for the proprietary fund, they'll match exactly because it's business type accounting all the way. And so here you have your 3 different funds laid out. You can see which ones have some money and which ones don't. And you can see what their liabilities are. You don't have heavy long-term debt, but you do have notes of bonds payable in both water and sewer and a little something in trash. And that's probably the comp abs.
Yep.
And then
Compensated
the compensated absences for the leave.
vacation.
$48 you're
Yeah.
referring to.
Yeah.
432. But again, the next page 11 is what you're used to seeing in the month to month or quarter to quarter financial statements of what's happening to change things as you go. So here's where you want to look down about halfway to the page where it says net operating income. And all of those are nice numbers, especially water. Sewers coming in a little close. You had $86,000 more in revenues than you did in operating expenses. That's good. Could you hire another person with that much if you needed to? Could you buy another piece of equipment if you had to? So it's not a lot, but it's good, it's not negative, and the same with trash. Then you have what are non-operating expenses, which drag that down to a lesser net income or loss before you get grants and certain contributions from people like your TAP fees, your system development fees. But all in all 3 of these funds had a change in net position that, especially for water, was good. For sewer, it maybe need to be your next focus of concentration. And trash, it's humming along. You may not have future capital needs there, but you
Well, we're
want
gonna
to.
be doing a rate in the middle of the year.
Okay.
Yeah, it's not.
Okay. So really think about these bottom lines when you're working on your budget. And I know that, the poor taxpayers don't like it when their sewer bills go up, but this is a vital service that needs to come first. Utilities need to come first, right up there with rent and food. Utilities is part of your shelter and basic living.
So
So
we have to always explain to the users that we can't use our tax revenue for water, sewer, or trash by law. It has to come from the users or grants and loans.
well, it's actually, I have to correct that.
Really?
You could pass a sales tax for this. It's not against the law to do it.
But it would have to be dedicated?
It would be for water or for sewer or that.
I've never heard of
But
that.
you would lose what's called your enterprise status for Tabor considerations, would still be enterprise funds. But if you have more than 10% of your revenues coming from a
State and local funding.
sources, like taxes,
or state grants.
yeah, then you would no longer be considered an enterprise fund, and if you wanted to go for debt, you'd have to have an election. When you're an enterprise fund, you don't.
Right.
So,
I don't see us doing that.
But that's why you don't want to tax for your business type
No,
activity.
because if it's voted down, what do you do?
that's why your
Right.
rates are supposed to drive this, because
Right.
remember, we just looked at the general fund and said, when there's a fire,
Yep.
you want to keep those taxes where you have to, where they're supposed to be, and not dilute that by putting it to things that you should be charging your users for.
Yeah, so I kind of go back to, we need people to understand that their user fee is what keeps water, sewer and trash.
Yes,
At lack of a better word, no pun intended, afloat.
exactly. Instead of going down the drain.
Yeah.
Here's the statement of cash flows, which shows how the money is coming in and out. And then we get to the notes, which, if you have an interest in these types of things, you'll find these interesting. It tells who your reporting entity is. You're just a town. You don't have some housing authority or something that's also part of your reporting entity. There's more information about these funds and how they work and what they are and what they're measuring, whether it's the flow of financial resources for the governmental or the flow of economic resources for the business type. And then you get over to some other items on page 16 that describe your policies and your definitions of what you mean by receivables or inventories and how they're valued. Moving on to capital assets on page 18, it tells you how the period of time over which various types of assets are depreciated. It tells you have a threshold of $5,000 or more for something to be capitalized. Has to have a useful life of more than 1 year. So these compensated avances are discussed here. So there's more information if you're later or whatnot.
I have a question about assets. Do you review your assets in question? And
The capital assets?
yeah, exactly.
In preparing for the audit, we update your capital assets spreadsheet. And we look at any that were disposed of and whether they were sold or just, trashed or whatever. And we show the differences on the tables in here. And then we depreciate them. And we do it separately for the governmental type and for the business type. And then the auditors test that.
But we don't look at the condition of those assets and try to evaluate whether or not they're maintaining their useful life or not. That would be management that looks at that to say, yeah, this equipment is working. It's got another 10 years useful life. Everything's good, or no, we've got problems. We look at the accounting side, the dollars and cents, that type of stuff. But as far as the condition of those assets, that is management.
So like the garbage truck, we put over $5,000 of repair into it. We've given that to Michelle and she updates our asset tracking sheet. So it does have some useful life to the
Yes.
equipment.
And we check all of the major outlays of cash to see if it was for a capital asset or if it was just routine maintenance. And we'll reclassify it to the right area if needed, and we look at a lot of invoices during the course of the audit prep.
So that's the thing that's going on behind the scenes between myself, Kaj, and Michelle, Lorraine. Those questions are getting asked and then they're updated or is it a journal in Cassell? It's something like that.
We make journal entries to post them and to capitalize them on the spreadsheets. And we do a reconciliation table that we give to the auditors saying, this is what came in or went out. We do the same with the debt and all the other major items in here, your major revenues, your receivables, your payables. We schedule them and show, okay, but we say we've got, 110,000 in accounts payable. These are all the items that equal that. So,
And that's that test of deal details where we drill down into those account balances to see what the underlying transactions are. And we're testing those. That's how we roll it work within each other.
You couldn't do this without Excel.
But you?
I couldn't, no.
No.
I have used ledger sheets in the past, but just for my little business.
Well, I'm old enough
Excel
to
is
remember the one-line system, the old pegboard systems. I remember back when I was having lots of years.
Cute little, like,
Yeah.
mechanical pencil hand. The Excel is wonderful. I do believe it's the best governmental accounting software that there is. It's certainly the best that I've used in my, hate to mention how many decades. And so I'm glad you have it. And my company, which handles this type of activity among others for a number of municipalities, I am at the point where I want to take on new customers that don't have to sell unless they're willing to convert to sell.
I've used a few in this, this one is probably the better one I've used. I did like Tyler, I did like their, the Unico, or what is it, Munis, right, Munis. I did like theirs, but, this one is a little easier to use.
It's much easier than Tyler for us because we're doing all the accounting, so we can, it doesn't have as many hoops for us to jump through to do things.
It was pretty, pretty reports.
Yeah, it does. And they have some things for the staff too, called steps checklists that show for each module, whether it's utility billing or cash receiving or accounts payable.
Very helpful.
That shows the step-by-step of what they should do. We can set those so that there's separation of duties that Jim talked about. We have a issue with, setting up the right permissions so that separation of duties is good. So, yeah, it's great.
It's not in a stock space like I had to do.
We couldn't have made it through our period where we had an checklists.
Well, just moving on through the notes, there's more information about the capital assets here, and a little more than was in the MD&A, but did a lot there. And there's more description about what was bought in his MD&A than there is here in just the totals. This is what needs to be in the notes, financial statements. Same with long-term debt for the government, as I mentioned, you just have the compensated absences. For the business type, you have your various loans with WPA and the Colorado Water Resources and Power Development Authority. You also have a couple leases. There's information following that on page 26 that describes each of those loans. It tells you when it was issued, why it was issued, how much it was for, what the interest rate was, what your principal and interest payments are for the next 5 years, and for each group of 5 years after that, it extends further. So there's a lot of good information there that you can refer back to if you need to, want to. Moving on to page 28, there's a big note about the employee retirement plans and be part of CORA, so it describes that. And then the police have the FPPA defined benefit plan, which is a very good pension plan. It's a very long note here. There's information that carries over onto the financial statements from this.
It really is interesting to note that the FPPA actually was fully funded this last year. So the net pension liability was zero.
By the state.
Yeah,
By the state.
the Fire Police Pension Association. So that plan runs really well. Now you go over to the school side with PARA, and they're not even at 60% funded. And so they get huge liabilities showing up on their financial statements because of that. But the FPPA has done really well the last couple of years. And this year is actually totally fully funded.
And you, as a participant, have some little percentage of what the whole fund has, so it does impact your financials, which is why this is here. You'll have a separate employee retirement plan, so all that's laid out. You have a risk pool, that's where you take care of your risk by using Colorado, the CIRSA, forget the acronym, Colorado Intergovernmental Risk Sharing Agency. And that's generally considered to be a good insurance pool also at State Fiscal. Over on page 35, there would be a notice of anything that's going to materially affect the financial health of the town that's due to something that's coming up, like a lawsuit pending litigation. for some, and here's a note here about the federal and state grants, financial sources. So somebody who's reading this, everything looks rosy at 12/31, but if you know of any subsequent events or losses or something that's gonna just change it in March, and it's already July, so we know, then it has to be revealed here too, and you're good in that area.
In 25, we'll still have one of those lawsuits we won.
But then also, one of the things we look at is to the extent that that's not covered by insurance.
Right.
So if it's covered by insurance, you really have no loss to the financial statements. So those disclosures we just referred to are more looking at a potential loss above and beyond any kind of insurance coverage that the town would have to cover out of its own cash. And so we rarely see that.
That's why that CGIA thing was great for sovereign immunity.
Yes.
Jumping to page 37, here's budget to actual. Oh, everything in the front didn't show the budgets anywhere. So these are shown in the back of the book starting around page 37. And there's what the original budget was. If there was a change, then it'll be set to a different column for final budget, and then the actual, and then variance, whether you came in above or below. So you're putting in under in revenues, but a lot of that has to do with that intergovernmental line where you're hoping to get a big grant for $1.1 million. And instead you had about 120 in other intergovernmental revenues. So that's why that shows there. The bottom line in the actual column is still the same. The fund balance change, not being dramatic. And then your expenditures, same thing. So sometimes if you come in way under budget, you might think, oh, good, we didn't spend nearly as much, but you might think maybe we should be budgeting less so that we know what money we're gonna save, or maybe we have to use it for a different purpose. So looking into the budget versus actual and how it trends over the years is very useful.
And I might add, keeping a narrow budget is really a great internal control aspect. Your fiduciary responsibility, Lorraine was talking about, when you're looking at budget to actuals, if you go back and look at a lot of different municipalities across the country, a lot of frauds have been found with budget to actual comparisons. Why have we used up 80% of our budget and we're only 4 months into the year? And having those kinds of questions. So having a narrow budget is a strong internal control.
And the Cassell budgets that you produce monthly, have on the right-hand side on all these budgetary things, the percentage of the year that's elapsed, that you spent of the budget, and then down the bottom, the percentage of the year that's elapsed. So that's really useful when you look at it. More similar tables for the sales tax and conservation trust fund and sidewalk fund, street fund. Actually, the sidewalk fund's on the back because it's not major. So we finally get to page 42 and then 44, 43, I'm sorry, where it shows these non-major funds that are rolled together into one column up front. And so they each get their day here of what their assets are and what they ended the year with and how the money came in. And looking at page 43, you see on both of them that some money came in, no money went out. So again, you save these up until you have enough to do a project or accomplish something with them. You don't have to, you can drib and drab them with, we mowing the park takes this much, we could charge it to conservation trust fund. But I prefer the way you do it and recommend that usually.
It's gonna go away this year because we did the bathroom amount.
Yeah.
So I'm using all of that.
Yeah.
Is that great? Included in here? Yeah.
Stability is nice, isn't it?
Behind these rolling up tables, they're called combining statements, are the budgetary comparison schedules for those two little funds, sidewalk and water. Sidewalk and conservation trust. Then we move over to the budgetary comparisons for the water and sewer. And it's kind of the opposite back here as to what happened in the other book, where I said, okay, the governmental funds, we don't usually keep track of capital on debt, now suddenly have it in the front. Here in the back, it's the opposite for the business types. It does show the capital outlay and the money out the door. That up front is just capitalized, changing your money from cash to a capital asset. This is saying you have to appropriate the money to buy that asset. So on a budgetary basis, you have to show capital projects. So down on page 45 for water, near the bottom of the long spent section is 396,000 was spent on capital projects for water in 2024. And you've had debt service going out the door of 154,000 principal and 20 grand for interest. So this is your money page for your water fund. And then you'll have a similar one for the sewer fund on page 47 and for the cash fund on 48. That is a quick run through the report. There's a required state report at the end. State legislature, what is spent for those.
What is this?
It's unaudited and it's put together by me.
But I was like, I don't even understand.
Yeah, it's something that has to go in the report for the state.
And the total, so the bottom line for us is, because this shows up in the budget under the highway, which was what, set how many thousands?
So
Highway.
if you look at the section B, local road and street fund balance, that's our beginning fund balance, the total receipts we saw come in, either from a highway user tax fund or from motor vehicle registrations. And then the total disbursements, what we spent out of the street department using this fund.
And is that
And then
125, 413,000?
Well, they also use the back spread, so the back is another worksheet that pre-populates section 3 on the front page.
I don't know how you fill this in, it's just Greek.
It's kind of saying, if you kept track of all your money that came in just for roads and streets, and then everything you spent on it, where would that get you? Well, you're not really doing it that way, and there's no need for you to do it that way. But that's what they kind of want us to show, and generally, you always end up showing, you don't get enough money.
Right, that's exactly what I'm saying. Like, so if you ever wondered why I always ask during snow and ice removal that it be separate, it's because it's a column, or a row in this worksheet that we actually have to show. And so we actually had to reclassify in 24, and we'll have to do it. We did it again in 25 because some expenses that were coming in should have been snow removal. And I asked Michelle to make those changes, especially for this year.
Can you explain, is this for in town or only that piece of county road?
No, this is
everything?
now.
So our fifth and Grand, this would be, is gonna have to be reported
It'll
on
be,
this?
on the second page is the capital outlay.
Yeah.
And so what you're seeing there for engineering, that's our Fifth and Grand engineering costs that you see there. And then what we'll do is when we do capital improvements and new facilities, because we'll have them, that'll go on that page.
Yep, for 2026.
It'll show up on 26's audit,
Yeah.
correct?
So, got a big project coming.
It's gonna be 3.7 million. All grant
A
funded.
lot of numbers.
You ready for a single loan?
In that light, let me mention one thing. Since you haven't had a single audit in a while, the one item that municipalities tend to trip up on is the suspension debarment requirement, that you're required to verify that any contractors are not on the federal suspension debarment list. Then you have to do that before you pay them.
Yeah.
So just as long as you're aware of that, that's what usually trips up anybody if they're going to get tripped up on a non-compliance item, is that one item.
So that's exactly why our procurement policy mirrors the suspension debarment from the feds, specifically for that, because that is, like you said, it is something that will trip us up. We didn't have a procurement policy or a finance policy, but we do now. And so that's where that handbook that you guys passed as well comes into play. So,
one of the things that popped out to me in this presentation was, and and Lorraine and I were at another municipality not far from here in the roughly southwest corner of the state, is your sales tax actually went up a little bit. And we saw that at another place as well, slight uptick. I do a fair amount of work up along the I-70 corridor, in the mountains, the ski areas, Summit, Eagle, Grand counties, and their sales tax year over year has declined since 21 and is continuing a slight decline down. And it's buoyed, even though it's a decline, it's buoyed a little bit by online purchases, Amazon type stuff, and big box stores. So it's the small local owned businesses that are seeing the biggest decline. And so it's interesting to see the geographical differences within just the state. Down here, sales tax seems to be holding up pretty well, where in that upper middle part of the state, the mountain region, it seems to be having weakness with the current economy.
I can speak to that a little bit. So it kind of trends with what you're seeing in Aspen as well, with ski lift ticket sales going down as well. So there's like this less tourism happening along that I-70 corridor. To our benefit, 23 over 24 saw more sales tax because we didn't have the road closed, the bridge closed like we did in 23. So we saw that bounce back in our sales tax this year, or last fiscal year. It was great.
And a lot of it is that in Summit County, et cetera, that's discretionary income. And here, people buy what they need.
Right.
It's not going to change much.
And so it's more stable.
Right.
Exactly. You're not getting the ups and downs and
Right.
and whatnot. You know, you came out of COVID and the tourism spiked up and then it came back right down. But you all have a much more level sales tax line because it is necessary as opposed to discretionary spending. But that allows the town to be able to anticipate the revenue stream a little bit better than if you're more highly dependent upon tourism revenues and things like that. Yeah, the tourism is definitely down. The closer to the front range, the better the sales tax numbers are because they're still getting the drivers up on a day and spend a little bit of money, but they're not spending the overnight hotel money and the big dinner money and the shopping money and that kind of stuff. And so the lift tickets numbers are still up a little bit, but the sales tax numbers are down because of that. It's just the daily travel stuff. So yeah, I mean, that helps you all be able to anticipate your revenue streams to a much better degree.
Still go to Gibson for Costco.
So questions, we've dished out a lot, but it's nice to have an audience that wants to hear this and is interested in the numbers and financial statements. The more that you all know, the higher level of knowledge you all have, the better you all can do your jobs, and that's fantastic.
Thank you very much for going through it,
You're
because
welcome.
I think I get it and let's just sure I do. So I do now. Thank you.
Thank you for your attention and feel free to contact me anytime if you want to delve into something later or follow up.
Okay, I'll just ask, there's one thing that you're like, just you guys could tweak this more or make this better. Is there anything like that?
From an accounting standpoint or from a town management standpoint?
Accounting standpoint, based on what you've seen or.
Well, I think that you've had tremendous improvement over the span of the last 5 years type stuff. You've really smoothed out the accounting on a daily basis. Stefan's really provided the policies, procedures, and formalized those to a tremendous degree. So I think that is real good. Probably the one thing I would say is on the budgets. You can have as many budget amendments as you want. So like the example that Lorraine was mentioning, you anticipated a large grant and then you didn't get it to the next year. Well, then maybe you do a budget amendment to ratchet down that revenue and the associated expenses So you can keep a more narrow line there. And then if something does change halfway through the year, then you do a budget amendment to increase the expenditures or something so that you've got a little bit more narrow range on that budget instead of having some bigger gaps. I think that would help the management of the expenditures and the revenues, keep you all closer to the pulse of what's going on a little bit better that way.
We did receive the grant, we just didn't do any of the expenditures. So,
In the year that we got.
and we didn't do them this year either, we're doing them in 26.
Yeah.
I wasn't gonna bring it up, but you did red flag the fact that depreciation wasn't being covered by new stuff. In other words, we're getting too cheap.
That was in my MD&A, I'm the one that read.
You wrote that?
I did, yeah. So that was in the MDA, it was our governmental capital assets or assets from our asset list, right? Let's see. It's only 1% between the 2 years, but it is, we're depreciating more than what we're investing in our capital assets for governmental activities. But that's going to change significantly between this year and next year's audits because we're investing significantly in all of our assets.
Okay.
Yeah.
Well, and yeah, you go back to up to 3 years ago. You didn't do much reinvesting in the infrastructure, whether it was the governmental infrastructure or the utility infrastructure. And so that's a little bit of a reflection of that. And now you're starting to kind of play catch up with that deferred maintenance. And what you'll end up seeing then is, especially on the utility side, water, sewer, is that because those capital additions don't run through the expenses on an income statement, they're put on the balance sheet as capital assets, but your depreciation expense number will go up as you have more assets and newer assets at a higher cost now being depreciated over a 20-year period. And so you will be seeing that depreciation expense going up on those water and sewer income statements going forward as you really invest into this capital assets in those segments.
One other point on that is on page 24, if you go back there and you compare a couple of figures. If you look at, under the governmental activities is the top section on page 24. You show capital assets being depreciated are worth at the right-hand column, 5.7 million. And they've already been depreciated 2.9. So they're about half done with their useful life. So it's not next year, and it's not even, you don't all have to replace some of it every year. You just have to be ready and realizing you need fund balances and money to replace them when they're all spent, when they're all too old. On the business type activities in the bottom, you see the capital assets being depreciated. Isn't it quite shown? Same thing?
8 million, it's the 8 million, 7.8 million on 12 million of assets, so that you're 65% depreciated over its useful life. But that's why you're also reinvesting in those water sewer assets, because it's been so long that you've got to come to catch up a little bit.
Our last major expenditure was the sewer plant, which was significantly long ago.
And we're still paying off the.
And then,
But-
that will lift depreciation.
And this does comport with what's on Roman numeral 21 XXI, what they just described. And that was where you were talking, trustee Heck. Well, I did flag that because we have started that trend to show that we're depreciating more than what year over year. The good news is this year we are surplusing a lot of things that have been on our books for way too long that are like depreciated out to 92% or higher. And they're selling this week. I mean, we've got people waiting on it. So that's great.
Doing public surplus.
We're gonna buy laptops. Okay.
Can we do the text for town to know that?
It's on the town webpage. I made sure to get up there today, and other than that, that's up to Stefan.
I know that might be good.
There's one other item that I might mention before we kind of finish up, and that is the ADA accessibility requirements that the state has. I was actually in a board meeting yesterday, a special district, and they had their attorney in there. And the state's IT, I think it was, department has just come out with some new guidance in the last 20 days. And if I get a hold of that, which I'm supposed to, I'll forward it on to you. But basically it says that you need to have an accessibility designated person in the town, and then you put some note on the website that says that if anybody has any accessibility issues with anything on the website, contact Stefan, and he will sit down at the table and read you line for line whatever you need to be read, or whatever needs to be done for that accessibility. And this guidance was basically saying only the front page documents of your website have to be readable by a PDF or Adobe or what have you. And this is literally just came out in the last 20 days. And so as long as whatever document is on the front page of the website is readable, everything else doesn't necessarily have to be. You just have to have that disclosure that contact such and such person, and we will make arrangements to make whatever we need accessible in whatever form.
So if you remember my second meeting here, you guys appointed me as the ADA coordinator because I was surprised that you didn't have an ADA coordinator. That the missing piece is putting on our website how to contact me. Yeah, we need to do that. And I got good news today that we got our reports back from our ADA transition plan. It's like 400 pages of things that we need to start investing in. So
that may back off now with this new guidance. And I'll forward that once they get my hands on it. They're supposed to send me the guidance that the lawyers received. So that's good news, but that kind of helps clarify what your requirement is on that.
So I was just gonna ask, I'm still on page 24, capital assets. So capital assets are this building, streets, sidewalks, curb and gutter,
Right.
and the public works building.
Yeah, infrastructure is the line there that you, for the streets, curb and gutter, et cetera. Those weren't required to be capitalized in the old days, so only it's been, 20 years or so that we've had to add those, and people could just start doing it then, not go back and necessarily evaluate everything that hadn't been. So that's not as accurate a figure for infrastructure as it might be, but yes, that's what it is. You've got a lot of investment in streets, curb, gutter, maybe bridges, et cetera, and buildings, and equipment can be stationary or vehicles.
and land you're gonna see go up in 25's audit because we purchased new land. For the treatment plants, will be in business type activities.
Oh, for that water tank.
Yeah. That hasn't changed in like 10 years. It will change next year.
I have a question. It's probably more for Stefan, maybe on page 45. Let's see if my pages are matching. I went with online, but I tried to.
PDF page instead of document page.
Yeah.
Oh, I mean, well, actually, no, I think it's here. It was water fund. Oh, and it was a revenue, and it says we got $2,500 in revenue, or $14,000 in revenue for a water tank. It's the topmost.
Is it bulk water sales?
I think that's gonna be bulk water sales.
So that's, okay, that's what I wondered. So bulk water.
And then the rent, right, and then the rents, that is something I didn't know that was coming in. It was from the Rovers, and they leased something from us, and they sent us a $500 check at the beginning of the year, a $500 check in the middle of the year. That's why you see that on this.
Okay.
That's why it wasn't budgeted for, because I didn't know it was coming. but they diligently paid.
Surprise.
Yeah,
Okay, thanks, that's what a water, it's the bulk water.
it was small.
That's what I figured I thought I'd ask. And I have another question. It's on page 43. And it is sidewalk income. Let's see. My question has to do with why is sidewalk income called a license? So it's probably not, it's the sidewalk table. Oh, no, there it is.
Because it's
Oh,
not
yeah.
taxes.
That licenses, the 30,000 that we're getting from the sidewalk fund is being called, is it called a license? Am I in the right row?
What kind of revenue is that again?
It's a fee that got approved by voters, but it's a monthly fee for property owners in town.
Licenses
utility bills.
seem like that weird way to call it.
Yeah, probably fee better than license.
Charges.
Yeah, well, I don't necessarily charges for services. A lot of times we have a line item that calls licensing fees. And maybe the fee you got lopped off from the license.
Probably more of a fee.
It's not sales tax or property tax, it's not intergovernmental, it's coming from another government. So we probably ought to read license and fees. That's what it is.
That's all the questions I had. Anybody else?
Do we need to make a motion?
You please do. So, I'll tell you the process. What's gonna happen is what you have here, not what was in the published packet, but this is what we need to send to the state. Today, as soon as this meeting is over, and if this is approved or accepted by you, I'll send it to the state. And then what we'll do after is, I've got to get with Jim to get my statistical section to him. It used to be called CAFR, but now it's an ACFR. So they just swapped names, right?
Yeah, the story is that the acronym CAFR is a very derogatory term in some African countries.
I see.
So instead of a comprehensive annual financial report, it's now an annual comprehensive financial report. And they just changed the orders of the names to make it ACFR instead of CAFR.
And we're all tripping over it.
So I'm getting that statistical section, a cover sheet, and Jim will package it together, and then I'm gonna send that into GFOA for a COA, Certificate of Achievement. We probably won't get it this year. That's okay, but they will give me feedback on what we need to do to get it in the future. So it's peer review. And then really they're not really peer reviewing their work, they're peer reviewing what I put into the introduction section, the MD&A, and then also statistical sections.
Yeah, very, very good.
I move to make a motion that we accept the financial statements with independent auditors report from Hinkle and Company dated December 31st, 2024 for submission to the state.
I'll second. All good? On the motion? Okay, all in favor? Yeah, I want to make sure you got that. All in favor?
Aye.
Hey, none opposed. Thank you. That passes and we make the deadline tomorrow. Thank you for all the explanation for both of you. It was really, really helpful. This does not come naturally to me at all.
The more you learn and understand, the better job you guys can do.
Right, because this is,
Welcome, any and all questions.
hey, our fiduciary responsibility is a really big one.
Yes.
So it's good. Okay. Thank you.
All right.
Oh, wait, you guys haven't been through yet.
I haven't, no, I believe the meeting is adjourned. Thank you. I'm sorry about that last piece.
There you go.
Oh. So this is the kind of stuff
Oh, here.
that matters the most, and nobody showed up.
Yeah.
You know, like,
What's really great.
I guess that's a good thing.
So are you're good.
Yeah.
I'm wondering if this is like a scientist, or an engineer adjacent thing.
I figured that when you can.
Yeah. The assessor just gave it to me, so
It'll work like tonight.